Okay, so I just want to quickly begin by just sharing a little bit about myself. So my name is Sunny. I'm the founder of a company called Unocoin. And just to give you a little bit of a background on that, so Unocoin essentially is India's leading Bitcoin blockchain company. I'm Canadian. I'm born and raised here. But about 4 or 5 years ago, I was living out in India for something else I was working on. And I discovered a guy named Anthony IORIO who was working on these meetups. And he was building companies and doing really, really exciting things in Toronto. And at the time, because I was living in India, I didn't have any friends there. I said, hey, what a great idea. Why don't I start these meetups up in India? And I did. And today there's over 2,000 people in those meetups. And those meetups really led to me starting a company called Unocoin. Unocoin, like I said, is one of the leading Bitcoin companies in India. We have over 100,000 users and is growing leaps and bounds. But 2.5 years ago, when we first started, it was just a website. It was literally just, a little hobby on the side. But what happened is about 2 years ago or so, someone by the name of Barry Silbert, who runs a company called DCG, Digital Currency Group, said, hey, I really like what you guys are doing. I want to make an investment in your company. And he did. And alongside our company, he's invested in about 80 different Bitcoin blockchain companies around the world. And the interesting thing is about a year after that, CIBC, OMERS, MasterCard, Western Union, and about 10 or 12 other leading financial institutions also invested into Digital Currency Group. So then I think a lot of us are asking, like, what's happening? What's going on? I know this technology is somewhat overwhelming and confusing, so hopefully we're going to try and demystify some of that. So our first speaker today is, by the way, before I begin, do we have Carissa in the room? Has she made her way down? No. Okay, so she'll speak later. So, oh, she's there. Carissa, do you want to say a minute or two on behalf of Mars before we begin? All right, cool.
Okay, so before I tell you a little bit about Mars, the washrooms are actually located on the other side of these doors, not the far door. That's the green room. And when you come back in, these doors are locked coming inside, so just go back around like you came. So hello, everyone. My name is Carissa, and I'm one of the associates of events at OMERS. And this is an incredibly dynamic building. It's one of the world's largest innovation hubs. And for those of you who are unfamiliar with some of the work we do here at Mars, in a nutshell, we provide a home to entrepreneurs and a bridge to the business world. Mars is a leader in the trend toward urban innovation, districts which allow entrepreneurs access to corporations, investors, mentors, university institutions, and labs to test their concepts. We like to say Mars is where inspiration meets realization. Mars helps startups in a range of sectors bring their ideas to market and thrive on a global scale by offering them a mix of advice, market intelligence, and education, as well as talent, customers, and access to capital. Under one roof, Mars brings together educators, researchers, social scientists, entrepreneurs, business experts. This community helps our most promising talent here and supplies established businesses and institutions with a steady stream of creativity. Throughout the years, we welcome attendees to over 2,000 meetings and events, everything from small meetups and talks to large conferences and hackathons that draw thousands of programmers. Our venture services team help early-stage science and technology startups reach their full growth potential. Their main goal is to connect the makers and the risk takers with people who fund them, help them commercialize their ideas, and create the policy to ensure their technology reaches the world. We work with more than 1,000 startups focused on prominent sectors such as work and learning, health, technology, energy, and financial technology. Our network of corporate, community, and government partners comprises more than 500 organizations spanning the Greater Toronto Area, Canada, and the world, from China to Chile, to the United Kingdom, to the United Arab Emirates. And as you know, Canada has a rich history of innovation. The discovery of insulin took place in this very building. It was Canada who invented the first electron microscope, the cardiac pacemaker, Bixby bikes, BlackBerry, Justin Bieber, and of course, Drake. So thank you for choosing Mars as your meetup here today, and enjoy the rest of your night.
Okay, so for our next speaker, so some of you who have attended our previous meetups have probably seen him speak. So Anthony is is a personal hero of mine. He's actually the reason we actually started these meetups and do these meetups. So before we get into the panel, he's going to just share for a few minutes about his experience. So Anthony is the Chief Digital Officer for the Toronto Stock Exchange. He's also one of the co-founders of Ethereum, and Ethereum was founded by people right from here from Toronto. It was non-existent less than a year ago, and today it has a market cap close to $1 billion. And he's also the CEO of Jaxx and Decentral. So please help me welcome Anthony.
Can I get number 6?
Check, check.
Thank you very much, Sunny. I was expected to come here to do a panel, and I was told, well, you can be on the panel as well, but you can also got to do a talk. So, all right, I can put that together. So I want to touch on a few different words and a few different themes for my very short, I think I got about 10 minutes and maybe some questions after, but two of the words I want to talk about is focus and failure. So it's been amazing to come to an event like this. I hosted 2 of these last year at Mars in the same place right here. And it's really amazing for me to be able to now focus on other things and know that there's an amazing team of people such as Sunny and Agreeson and Antoine and Jerry and all the people that has taken now to put together these events. And they've been doing some really amazing ones here and at PayTM recently. And it's really a breath of fresh air for me to be able to focus on the things that I need to focus on and still participate and be part of these events, but know that they're in good hands and that these guys can put on these great events, because it takes amazing passion and amazing drive to throw together and put together these types of things. It's a lot of work. I put together about 110 events over the last 3 years in the Bitcoin space, including the Bitcoin Expo 2014, including 2 events here at Mars, and then all kinds of meetups and different events. And it takes a lot of time and a lot of effort and a lot of people to put it together. That brings me to the next thing of failure. So for those who don't know, there was a planned expo this year in September. I was hosting it. It was going to be at the Sheridan Center. And due to a number of factors, we decided to postpone the event. It's something that I didn't want to do, but something I think is for the better, which has enabled me again to focus on the things that I need to focus on. The community building stuff is excellent, but for me it's time to really dig down deep and work on the wallet space, which I'm involved in, the consulting space, our work that we're doing with the Toronto Stock Exchange and helping them to get into the blockchain space, and then be an integral part on how Canada is driving itself forward on the blockchain space, and partners and collaborations with the different banks, partners and trying to work with the government on how we can actually use this technology in a way that's going to really change Canada and turn Canada into a global leader. So I don't like failing, and I consider not putting on the event this year a failure. It was done because there's 2 competing events, one in Montreal that's going on exactly the same time, that's also touching on fintech, and they've expanded out into blockchain, along with the Shanghai event, has an Ethereum DevCon, so an Ethereum conference, as well as a Shanghai blockchain summit, I think it's called, happened to be on the same day. It's just the way it worked out, but not doing ours then is going to enable me to head down to those events. And it's also going to enable us to look about putting something on when our 2 main partners, Deloitte and TMX, who are also sponsoring the event in Montreal on the same day, can regroup and work with us to really put on an amazing event next year. So that's our plan, to put something on in March or April of next year and really focus the world on Canada and what we're doing in the blockchain space and the fintech space. So I'm going to speak a little bit about one of the topics that's come up recently involved in the Ethereum space, and that's immutability versus consensus. I was part of a debate on Let's Talk Bitcoin last week, where it's the first time ever I think I've been in a debate where there were 3 people participating, and I was asked by the host of it, or asked by Adam B. Levine, do you want to be involved in this debate? And I said, sure. And he said, well, what side do you want to be on? And I said, I'm not sure. So we ended up finding someone that could work on the immutability side and someone that could work on the consensus side. And for those who don't understand what I'm talking about with those 2 things, they're very integral parts of Bitcoin and very integral parts of blockchain. Immutability being that the blockchain itself is supposed to be something that can't be changed. As soon as you put an entry into it, you can't change it. That's one of the great things about it, is that it's locked in stone. And then on one side, it's consensus. It's the ability for people to come together and make decisions, and those that have the majority get to decide, where the chain goes, where the blockchain goes, and that would become a heated debate between Ether and between Ether Classic. How many people know about Ether or Ethereum here? Okay, so most of the people here. Ethereum is a platform for developing smart contracts. We created it starting in 2013. Last year, we launched it. I'm no longer involved officially with the project, but I'm still building out things around the ecosystem in the wallet space and setting things up with it. So how many people are familiar with the DAO? A lot of people as well. So the DAO was a mishap. It was a test of decentralized autonomous organizations. 5 minutes, Sonny? Test of doing a way to fund projects in a decentralized fashion where the people that participate get to have voting rights on the way the money gets spent. And it's a great concept. It's going to be, I think, one of the milestones, not the DAO itself, the one that happened, but the whole technology of governance on the blockchain in a way that doesn't have jurisdictions and people can do it anonymously and you put your money in so you get to decide what's going on. I think it's going to be a major pillar in the blockchain space. Bitcoin enabled value exchange globally instantly for free without third parties. Smart contracts with Ethereum enabled more complex and a more programmable blockchain. And I think decentralized autonomous organizations is going to be really that next thing that comes up that's really going to be a game changer on the way that funds are created and the way that people can vote on how funds get dispersed and build out ecosystems and communities. So the debate was, on one hand, people in the DAO wanted their money back, so the thing had a flaw. The coding of the contract that ran the DAO had a flaw, and there was $150 million at risk there of people that put money into it that could potentially lose it. So the debate came up and saying, well, should we change the protocol of Ethereum because an app failed? It'd be like taking something on the App Store and saying, well, this particular app didn't do what it was supposed to do, so we're going to change the whole platform to make sure that people can actually get their money back for. And it's something that I disagreed with. I was an investor in the DAO. I had money in there. But still, to me, the immutability, the not being able to change the blockchain is something to me that's very, very important. And I think it's even a little bit more important than the consensus mechanisms that we've got inside of these different technologies. Consensus really can be, it's who gets a say in the matter of if something can happen. Is it the miners? Is it the exchanges? It's very difficult to judge if you do get true consensus. And I think what happened is that they really jumped the gun, but had to do it because they were pressured by time. But do you really change the whole social contract that a platform has because of a faulty application? And I say no. However, I still believe that if consensus says, and if you can get a true consensus and it decides to do that, then that's something else you got to think about. But for me, blockchains are supposed to be immutable. Ethereum itself is supposed to be able to build unstoppable apps that can't be shut down, that are censorship-proof, that just run as they're supposed to. Code is law. If the way it's coded is it's supposed to happen, and if it doesn't run the way it's happened, well, then you're out of luck. So I take more of the immutability side, but now we have two different currencies that have come up. We've got the Ether Classic. It's going at about, I think, about a quarter of the Ether right now. But it's going to lead to some very interesting decisions, and I think I'd like to encourage the communities to really come together. It's not about us or them. It's not about being polarized to one thing or another. It's not about Bitcoin or Ethereum. There's amazing technologies coming out. There's Rootstock. There's Zcash. Dash has amazing things. All these other things that we need to really collaborate and work together on to build around this amazing technology and move it all forward. Thank you.
Great. So thanks for that, Anthony. So Anthony was talking about some really recent events, right? Some things that are maybe a little bit more complicated. So just by a show of hands, how many people have known about Bitcoin for, let's say, more than 3 years? Wow, that's surprising. Okay, how many people have known about Bitcoin for more than, or let's say less than a year? Just by a show of hands. Okay, and less than, let's say, a month? Anyone that just learned about Bitcoin recently or blockchain? No, not at all. Great. Okay, so one thing I just wanted to quickly share. So the question we get often is, well, what is blockchain? What is Bitcoin? So just really quickly, so Bitcoin is essentially the world's first open source, decentralized digital currency and payment network. So the reason most people find this technology very confusing is because it's two things in one. So number one, it's a digital currency. When I first heard about Bitcoin a couple of years ago, each Bitcoin was worth about $10. Today, I think it's like $800 or $900. And the second aspect is, so it's kind of like dollars or gold or rupees, so it goes up and down in value. It's fairly volatile. Right? And then the other aspect is that it's also a payment network, kind of like PayPal, Western Union, or Visa, or MasterCard. So there are rails for moving value from one point to another. But the unique thing about this system is that it's open source, so you don't need anyone's permission to get access to this. If you can read code, you can access the blockchain. And the second thing is that it's also distributed. So there's no central point of failure. There is no CEO of Bitcoin or blockchain. It's literally this code that's kind of like SMTP or voice over IP. So let's jump into the main event for the night. So we've got a great panel lined up. To begin with, we have Brian PHAN, so he's going to be our moderator for this next panel, and then we have Jim Orlando from OMERS. So I assume most people in this room already know what OMERS stands for, but they're essentially a $65 billion pension fund, right? So it stands for Ontario Municipal Employee Retirement System, right, Jim? Good. And so within that, within OMERS, there's an entity called OMERS Ventures, and that's a $500 million fund where they invest in future-looking technologies like blockchain. So we're going to get a great perspective from Jim. We've also got William. William, many of you probably know him if you've been in this space for a while. He's written an amazing book. It's one of the top sellers called the Blockchain Business. Correct? And you're starting up, so you're going to be making some announcements later on, so I'll let you talk about that. William's always doing really, really exciting work. And then finally, we'll also have Anthony help us ask questions as well and really get to the core of this. And then at the last 10 minutes or 15 minutes, we're going to open it up, so start thinking about questions, and if you have any, we'll bring a mic around. So with that, I'll invite the panelists to the stage. Okay, so.
Thank you, Sunny, for that introduction. Also, thanks for asking the question, who here has heard of Bitcoin and blockchain? I'd seen about maybe 50% of hands raised for those of you that have heard about Bitcoin within the last 2-3 years. A show of hands, who would actually be able to comfortably describe to me the differences between what Bitcoin is and what blockchain is? A show of hands. So a little bit less than the hands that showed up. That's actually where we're going to start today. So William is an author, a blogger, and a very prominent thought leader in the blockchain space. I'd be curious to see what your opinion of what blockchain is and compare that to Bitcoin.
Okay. I think Sunny did a good job at explaining that. I like to look at the space in 3 different ways, a business way, a technical way, and a legal way. And from a business perspective, you want to think that the blockchain is like a peer-to-peer marketplace. It enables commerce and services to be exchanged between 2 people without anybody in the middle. From a technology perspective, it's maybe a replacement to a database. So in the previous days, 2 databases had to talk to each other to synchronize something that was changed. Like if I was sending money from my account to your account, the 2 banks' databases have to synchronize. With the blockchain, we replace 2 databases by 1 ledger, and everybody writes to that ledger. And then legally, finally, it's a transaction validation platform. So it means that if a transaction happens on the blockchain, then it becomes valid and validated. And Bitcoin, think of it as an application of the blockchain. And some people have said that it's maybe the first big application of the blockchain. But it represents a currency, a cryptocurrency. And going forward, there will be many different cryptocurrencies. Today, Bitcoin is the biggest, largest one. Ethereum is the second one from an Ether perspective. And the list goes down from there. But that's a good starting point.
So as investors in the blockchain space, William, you're the managing director at Virtual Capital Ventures. Jim, yourself at OMERS Ventures. What is your guys' investment philosophy when looking to invest into blockchain companies? Jim, if I can maybe start with you.
Sure, happy to start. I would say the first thought we had around, looking at the sector and understanding whether there's a venture investment potential was actually to consider buying Bitcoin as just simply an investment, and then more secondarily, more recently, Ether, and kind of characterize what the thought process was. Ultimately, we chose to not invest in either. First thought around Bitcoin was, that's a currency, and just as a venture capital investor, when you're looking to invest in new and emerging technologies to generate our role is invest in new and emerging technologies to generate venture returns that ultimately, the money we invest, we pull out more, and ultimately goes, in our case, to pay pensions of the policemen and firemen in the province of Ontario. That's fundamentally what our job is. So having a thought around buying the Bitcoin as a currency, we ultimately felt it wasn't really our role, and I kind of a little bit likened it to if a new country, if the island of Atlantis all of a sudden showed up, in the middle of the ocean, and there was a new currency in that new country, would we buy that currency? Probably not. There are currency traders that do that, and ultimately, if Bitcoin were to become, a viable currency, because it wasn't necessarily obvious at the time when we were thinking about this almost 4 years ago now, made the decision that ultimately that's not our role. Maybe we could generate, and certainly it has proven to be the case, we could have generated venture returns, but ultimately decided that that wasn't for us. More recently, as it relates to Ether as a currency, same conversation. My thought process there was, well, Ethereum and the underlying protocols, seem to be good and strong building blocks for next generation of services. So part of what my hope and wish was, frankly, is that instead of trying to pick a bunch of different startups or a single startup that might be the winner in smart contracts for art or smart contracts for music or something or other rights management, is there a way just to buy Ether, the currency, as a macro play against basically the growth of Ethereum? And what I think ultimately, I wouldn't want to say realized, but ultimately hypothesized that although we felt strongly that Ethereum, the underlying protocols, would be, emerge to be very, very useful, that it wouldn't necessarily be the Ethereum blockchain as the necessary platform for that. It may be the actual code that gets implemented in a private Ethereum, blockchain-like implementation. So it would physically have nothing to do with Ethereum currency. So ultimately ended up with no investments in the currencies themselves. That's a long starting point to your question, which is, how do you think about investing in the blockchain technologies? And I do divide them into really the three categories: the public blockchain that Bitcoin is built on, blockchain, the code itself, and there are a bunch of companies that use that and adapt it. And then similarly over to Ethereum, there are others that are building businesses around using the code base within Ethereum. In all of those, the real difficulty becomes, how do you find a single company that can emerge to be a winner, to be differentiated in space, and the key words would be sustainably differentiated. And it turns out to be a very hard thing to do, because by definition these are open protocols, it's open source software. For every Red Hat there are multiple, kind of liken it to Linux in this case. For every Red Hat there are multiple Red Hat-like companies, and eventually over time a Red Hat emerges. But it's not really obvious until it's obvious, and in which case, you're not going to generate venture returns. So kind of a long answer there. Sorry for kind of dragging on, but we're just getting started, and just wanted to give my open perspective on, the key point in venture investing is to look for companies that have a sustainable differentiation, and it's proven to be quite difficult so far.
Absolutely. So you're saying you guys invest more towards blockchain, the technology, as opposed to the cryptocurrency side of it. Now, William, you've mentioned that we are going to jump into a future where there's going to be tens, hundreds, thousands of blockchains, a future full of blockchains. Considering that, how do you invest into startups?
Okay, so I look at the marketplace in three different segments. And this is traditional. It's been the same way with the internet. On the first segment, it's the layer of the infrastructure. So think of it as the base layer. And then above that, there is the middleware level and the services. And then even one more level up is the application layer. So think about it that the blockchain is really infrastructure. So you need first the infrastructure to be laid out. And it consists of peer-to-peer networks and nodes and what blockchain is really. It's really a new infrastructure in the same way as TCP/IP has been a new internet infrastructure. But then an infrastructure is not really useful without services that you can kind of build, so you can build applications. So the middleware, the services side, is all the tools and the ways to facilitate building applications. And then ultimately, the goal, arguably, is to build applications on the blockchain. And then maybe the ideal application will be that you may not know there's a blockchain behind it. So ideally, it's the user that is interacting with an application, and it's invisible to them. But then with the blockchain, there's something interesting, which we're seeing a lot of, is the advent of new decentralized protocols. So the blockchain itself is a protocol. It's a horizontal protocol because it can be used for many different applications. But there's also vertical protocols that are becoming, hopefully will become more prevalent. So one of them is OpenBazaar, for example, who is developing a peer-to-peer decentralized open protocol for doing e-commerce. So that is a vertical protocol. I'm an investor and a board director at OpenBazaar. So that's one example. So there, the line blurs between the protocol and the application itself. So OpenBazaar is the open source protocol, but OB1 is the company that's developing the services and the applications on top of the protocol. So this is a new thing we're seeing now, where a company could be kind of playing across the three levels all in one, whereas before it was just very distinct. And an example of the services companies, I think you'll hear later from Nuco. So Nuco is in the category that I call middleware. And we need those tools because right now, if you're a developer and you want to start to develop an application on the blockchain, it's like we're at the days where you have to go to Home Depot to build anything. You have to buy the nails, you have to buy the 2x4s, you have to buy every single piece of equipment that you need to build this closet or table or whatever. Whereas what we need to be is at the days of IKEA, where you can go and then buy the whole thing. Yes, there is a bit of assembly required, but at least they've covered all the pieces for you. And companies like Nuco and others, I think, are that kind of, I put them in that category. Another company that I'm involved with called Block is also doing that, which is to give you a stack that is fully assembled and ready to go. So as Jim was saying, there will be winners in each one of these categories. And we're on the lookout and continuously, like I get a lot of emails every day. I get between 5 and 10 emails of crazy ideas or good ideas from people that have either read my book or my blog. And this is kind of one of the interesting things that I feel lucky to have, is to be really in touch with the marketplace.
So let's talk more about your investments. You've made an investment into OB1, and Jim at OMERS Ventures, you guys have made an investment into Digital Currency Group. Can you speak a little bit more about your investment to them, why you invested in them, and what's particularly unique about them compared to everyone else that you've seen?
Yeah. Well, so, starting, I guess, with DCG, and for those not familiar with it specifically, it's a New York-based company. There are three parts to DCG itself, and it kind of ultimately leads to the answer. DCG is a company that does currency trading, is one of its business units. Another one is they put on conferences, and there's information services all around sort of Bitcoin blockchain. And then the third component of it is they actually invest in underlying companies. So, our interest in DCG was really it as a, big and broad company across, the sector. So if I kind of refer back to my comments a little earlier on looking for at least one starting point of, what I was hoping that maybe buying Bitcoin would allow for us, or buying Ether would allow for us to give us let's say a foundational investment, we ended up triangulating to investing in DCG because they have all these, underlying investments in companies like Sunny's company and 79 other companies that, we get sort of quick and easy access to, and understanding what they do, and our opportunity would be really with DCG as a seed investor in these companies would be to invest in a Series A or in a later stage round, like a Series A or Series B for that matter. So in many ways, the investment in DCG was just a really strong opportunity to invest in a benchmark or a bellwether. And then on that, our intention is to build on several others, which we're getting quite close to, but haven't announced yet. So there's a few other pillars that we build off of that platform.
Gotcha. Now, DCG, you said, was a company based out of New York, correct? correct? And OB1 is a company based out of?
OB1 is a global company. So the CEO is based in Washington, outside of Washington, but their employees are in maybe 6 different cities.
So let's talk about Toronto and Canada. Anthony, you've done a lot of work here with Decentral, Jaxx, both community and business-wise. Tell us about operating a blockchain company here in Toronto, the opportunities that it provides, and maybe some of the disadvantages that you could speak to as well.
Sure. So I've also invested in companies as well. I mean, or platforms. I was an early investor in Bitcoin, early investor in Ethereum, and those things combined, deciding to actually purchase the tokens, has done quite well in allowing me to facilitate building the company. So I invest in my companies. That's the extent of mine externally, is investing in the companies that I'm doing, which is in the wallet space. I think the space to really look into is things that are going to spread across many different platforms, ones that are going to be interoperable. I think picking one winner right now doesn't make any sense. I think you really want to spread it around and ensuring what's being worked on is going to be able to be agnostic between many different platforms that are going to come out in the future. And there's going to be tons of them that do emerge. And I think we're in the very early stages right now. There's very few companies that are really making money out there right now in this space. It's very difficult. The dApp companies, the ones that are developing applications on top of Ethereum, the decentralized applications, it's going to be a while until they are feasible and actually that they're going to be profitable. I think the infrastructure is what's being built out right now. I'm in the wallet space, and we're a multi-token wallet, and this is why I don't like the polarization of different currencies or saying it's Bitcoin or no, it's not, it's Ether. It's really, we're all in a space that is so new that we need to build the groundwork up. And it really doesn't make sense to start polarizing different technologies. When I first got in, everything was Bitcoin. If I had taken that opinion and said, oh, everything's Bitcoin, I never would have got into Ethereum. To now say that everything has to be ETH rather than Ether Classic, I think is a mistake too. We all need just to build this out together. We're partnering and working with the guys from Rootstock. Barry Silbert connected me with Zuko from Zcash. We're starting to build wallets for Zcash. It's really about building for anything and then being ready for the winners that actually do emerge. So I think that's probably the best play, is to really not, you can focus on one technology or other, but see how you can also collaborate and work on a project that's going to bring all the communities together around this technology of blockchain that we all think is going to be, world changing. Oh, and in Canada and in Toronto. So Canada's had a very vibrant scene. A number of companies have come out of Toronto. Vancouver's got quite a scene. There's a lot of action going on in Montreal. It's difficult, not just in the blockchain space, but in many different other sectors. Cracking that nut of how do we retain talent here? How do we build out infrastructure? And again, to me, it comes back down to collaboration again. We need companies, we need the banks, we need the smallest fintech company, we need everybody coming together and help building out infrastructure that's really going to grow Canada out. We need to work with policymakers, regulators. We need to educate them. They're always the last to get on board, and that's fine. You've got the communities, you have the businesses, and then you have the regulators and the governments are the last to be educated and understand this. But that's our goal, is to educate. Our goal to show them the potential that this has to create new sectors, create new jobs, not just in blockchain, in fintech, all the different areas that are emerging out there. So I think the collaboration, where we need to build up infrastructure together and work together, and then you're going to get your competitive advantage that's come out of that. But I think that's what Toronto has an amazing opportunity to do. I think the federal government is looking for ways that Canada can distinguish itself on the technology scene. We see other areas that are going down. The natural the resources, the mining, or things, and I think technology can really fill into that. I think the TMX and other companies are looking for technology to really fill the gaps with that, and that turn Canada into that global leader of finance technology. Because I think we have a great opportunity to do that.
If I could add to what Anthony is saying, what we need as well here in Toronto is more developers, blockchain developers. And there's a shortage of blockchain developers, not just here, but worldwide. By a show of hands, how many in the audience consider themselves as blockchain developers or develop on the blockchain, have developed? So not too many, maybe 10%. So that is where that's where innovation starts. We need a lot more developers. To give you a perspective, just as a comparison, and I did that research for the book, Do you know how many Java developers there are worldwide? JavaScript, Java, and all the J2EE? 10 million. So you've read the book, that's good. 10 million, because Java is the language of the web, right? When the web took off, it was at the time where Java became available. Because for the first time, we had this universal language where you could write an application and not worry about where it's going to run, but it's going to run on the web, and that was good enough. And with the blockchain, we're not exactly at that point, but the blockchain is this new technology. And right now, 3 months ago when I did the research, there was maybe 5,000 blockchain developers throughout the world. And that's nothing. Maybe we're at 6,000, 7,000 now. It is a very small percentage compared to the Java developers. And if you're a developer, if you know Java, it's very easy to learn a blockchain script, because some of them are based on Java, some of them are based on Python. And if you know scripting languages, then you can learn blockchain scripts and write smart contracts and write applications. So I'd like to encourage any developer to start to dip their feet into, and toes and feet and full body into the blockchain, because that's really the source of innovation.
I'm going to continue that discussion actually, and talk more about the kind of the needs, the gaps in the blockchain space. So Jim, if I can throw this one at you, you've had a lot of companies pitch you. In your opinion, what are the gaps and what are the needs required for companies to succeed in the blockchain space?
Yeah, there's really three elements, and it's a generic answer to kind of say, Toronto and Canada is slowly graduating up the levels in these sort of three areas, but all three have to happen in parallel. You have to have, the developers and the ideas, and the companies need to be formed, the entrepreneurs fundamentally. Second thing is the customers. You need to have early customers, and customers, frankly, who are willing to take a risk because on a differentiated technology, on an emerging company to offer something new. And then the third area is risk capital. If you have any one of the, one or two of those three elements, it's going to be pretty difficult to really, move up the chain of the ecosystem. So all three have to happen, and the real answer to that is it simply takes time for individuals to graduate in each one of those areas. So entrepreneurs, obviously, people talk a lot about, is it a second-time entrepreneur or a third-time entrepreneur, and were they successful previously? That's an easy one, and everyone focuses on that. And in Canada, we need to have more of those. Equally over on the other side, we have a different banking system here in Canada as compared to the U.S. They are bigger companies, and some would say quite slow-moving. On the other hand, I see them, readily adopting some of the technologies and at least doing some trials. As it comes to risk capital, more the page there, or the, what my business card says, so to speak. We need to have more of us. I need to have more competition, and I would also say, but on the other hand, dollars can flow from the U.S. and U.S. venture investors into Canada for the right companies. So there's that element of it as well. So with those three, and over time, and the only way you can really build those three is with time, because you can't instantly make successful companies. It's not a hedge fund that we can flip companies. It takes years to build, a differentiated technology and make your mark, in terms of the technology landscape. But we're getting there slowly but surely. I am very encouraged. This is the largest meetup, and look at what the topic is, the largest meetup in Canada. And that in itself is very encouraging, and the number of companies that we get contacted by and that we're meeting with in and around this area is positive. I'm also seeing a lot of very interesting conversations developing amongst the banks and the other financial institutions, including a pension fund like ourselves. So.
Sorry, Anthony.
So what's different about the blockchain space in creating successful businesses is that this is a disintermediation technology. This is a technology that is going to change the rent-seeking models that we're so used to right now, because it's enabling peer-to-peer interaction without needing third parties. That's where we're heading. So the ways of making money, I think, are going to disappear, and we're in a space right now that's saying, okay, well, we're using this technology that's getting rid of the middleman, how are we going to make money? That's the question that hasn't been answered yet, and it will get answered as part of evolution. It's all about value creation. It's how can you create value between individuals. So in this technology that is removing the layers of third parties that are used to, that is so used to this trust layer that we're so used to having of these third parties to facilitate our interactions, whether it be banks, whether it be brokers, whether it be even lawyers in the future with smart contracts. This technology is enabling developers, very powerful. Developers are going to be the key in the future that can now write smart contracts and write things that literally execute it instead of having the third parties that we're used to actually carrying out those things. So we're kind of fighting against this. We're like, how do you monetize this industry? And that's what's going to be figured out. The value chain has not been figured out yet. It's going to happen, and it's going to take, again, part of evolution. It's just how do you create more and more value between individuals moving forward. That's what you need to achieve. So we're all in a space right now, okay, let's get rid of those third parties, but we're a third party. What do you do then? So it's a race down to zero that's going to be happening. You're going to slowly make things cheaper and cheaper and cheaper to the point that you're going to completely have to revamp your ways you're making money, because it's going to be 0% commissions on things. And you're going to have to be very creative and figure out new ways to create that value and add value. And that's just all the part of evolution.
Another factor when we look at companies that would eventually become successful with the blockchain, the key factor is the number of users and how they can attract them. So as a starting point, because Anthony, you're closer to this, how many Bitcoin currency wallets are there, you think, today in the world, roughly?
Wallets itself? Types of wallets? You mean?
No, like how many
companies?
users on wallets? About 10 million, 5 million?
I'm not sure, Will. You may have those numbers more than I do. I'm not sure.
Probably about between 5 and 7, let's say. That's
okay.
the best estimate. So that's still not a very, very big number. So what the blockchain and Bitcoin need is more users. So when you come up with a new startup, and if their market is only the Bitcoin users or the blockchain of cryptocurrency users, that's still a very small market. To give you a perspective, in 95, in the internet days, you know how many users there were in 95? And 95 was the very, very early years of the internet. Not too many businesses were successful with the internet. I remember when in 95, we had 50 million users on the internet. And we were saying, wow, today there are close to 3 billion users on the internet. And 50 million is a lot, but it's still nothing to make a big market. And with Bitcoin and cryptocurrencies, we are for sure under 10 million right now. So it gives you an idea. Now, if you're a new company, if you have an idea, if you're an entrepreneur, don't just look at the cryptocurrency users currently. Look at how you're going to attract new internet users that for the first time are going to get into the blockchain, or for the first time are going to get into your application without even knowing what's behind it. So the point here is to make the barriers of entry much lower. So any new application, whether it's a dApp or something interesting, something new, make the barriers really, really low so that users don't even think of the blockchain. An example is, you maybe have heard, there's a marketplace now called Steam IT. It's a decentralized Reddit. So if you go on it, it looks almost like a Reddit. You wouldn't know that there's blockchain behind it. You wouldn't know until you really spend a few minutes on it that you can earn points by voting on content, and that those points could be worth something. And there's an elaborate scheme behind it, but you don't have to know it if you don't want to. But the point here is that this is an application that looks like any other application. And there are other Ethereum-based applications that are like that are starting to look and feel like any other application. But deep inside, there might be a blockchain. Steam, it has its own blockchain, but you wouldn't know it. And you shouldn't know it as a user. You don't care for TCP/IP or for the network protocol or whatever technologies a website is using. All you care for is the user experience and the user interface. So back to kind of think about how many users can you attract and lower while lowering the barriers to entry.
So the statement you're trying to make is the technology should move backwards, so it's not really seen in the front.
Eventually, yes.
How are we for timing? Great. Yeah, I'd love to get some questions from the audience.
And I want to make an announcement. So the most interesting question, which I'm going to decide for, is going to get a copy of my book for free. So here we go.
Okay. Okay, so I guess we'll start with questions. And then Brian, do you mind maybe helping me on that side of the room, and I'll start here?
Actually, I'm going to change the method of decision making. I'm going to make it as a consensus between the three of us. That's
Okay, so just for the questions, we ask that you keep them short and to the point. Thank you very much.
Question to Jim. I heard you saying that, hey Jim, I heard you saying that you'd rather the money is not coming from the US to Canadian startups. What are you guys doing at OMERS to prevent that? Are you being disruptive in the way you fund, or you're still followers?
Yeah, maybe I misspoke. What my point there was, in those three pillars that I believe you need to have a successful ecosystem, dollars that are willing to take risks on entrepreneurs and technology, you need the dollars. And my point was, at least in that third pillar, individuals from the US can help because they can invest in Canada. So in many ways, I was kind of saying, I think the opposite of what your question was, and if I miscommunicated, my bad. But my point was more that Canadian startups can go to the US to look for capital. So certainly I'm not doing anything to, I can't do anything to stop that. In fact, in many ways, we've lobbied to, more broadly, to have some changes in the tax code that allow more US investment into the Canadian startup ecosystem. But in Canada, as it relates to, Canadian domiciled venture firms, there are a whole bunch of us now, and some are smaller and sort of moving up their way into the ecosystem. There are a number of groups that started with $50 million, $50 million fund 3 years ago. They're now at 100 and 150, and things just keep moving up. So I think the risk capital of people based in Canada, is starting to likewise graduate with the whole ecosystem and move up. Does that answer your question? Okay.
Thank you. I think we have a question over here.
Hello. My name is Subbu. I have a question. So how do you decide, when you come up with an idea, how do you decide the idea is worth solving using a blockchain? Smart contracts are essentially business rules that can be off the blockchain as well. So how do you decide if the idea that you come up with is what's solved using a blockchain?
Sure. So I guess you got to ask yourself: is it having a database? Is it something that needs to be shared? Is it something that needs to be distributed? A lot of problems can be solved with databases, and that's what we've seen I've seen a lot of companies struggle that we've worked with, that we've consulted with. Okay, we just want to get into this space. We don't care. Let's blockchainify this. Well, that doesn't make any sense. You can just have a database and you can do that. So there's no need. So you does have to pass a litmus test to see if it does make sure that it does require blockchain in it first. So a lot of people are trying to get press opportunities out of this, and a lot of people, there's a lot of noise and a lot of fluff out there. And that's, I think, what we've seen a lot of larger companies struggling with is what do we do that actually makes sense when we're trying to get into this technology. And for me, it's more about educating, learning what wallets are, learning what private and public keys are, because those are going to be the tools like you have with email back in the day when you're in the early 90s, figuring out what email is. That's where companies, I think, need to educate themselves and start learning about the technology itself, and then deciding if their services can actually be automated more using blockchain technology. That's some of the main benefits that we're seeing a lot of larger companies is how do we save on our costs and automate these services that we're so used to having manually while we're looking for the ways to monetize in the future.
Okay, thank you, Anthony. Do we have another question over here?
I would just add very briefly that it's not just the idea, it's about the team as well. So that's an important aspect.
Perfect. We have a question.
Okay, so for the next question, we have a gentleman in the front. There's just a little flow diagram of when you need a blockchain.
So this question is actually for all three of you. So for me personally, I just got into blockchain and learning about it recently in the past few months. In the past few months, I just learned about it. So for me, I was trying to get a hold of all the articles and opening up a wallet and trying to figure out, okay, how do I wrap my head around this? What is it? What does it mean? Could each of you kind of give just one tip as to what is one thing you could do to get your foot into the door for someone with maybe not a developer background, just someone that's really trying to learn? I know you have your book. Aside from recommending the book, anything else?
Aside from the book, read my blog.
But just one thing that each of you think could be the best tip to accelerate the ramp-up period of knowledge.
Sure. So you really got to look to what you're skilled at. Okay, if you're passionate about the space and you're coming to these events and you got your mind racing on how do I get involved in this space, which is what happens to a lot of people. You're passionate about it. Your mind starts going, okay, I want to get in, I want to get in, I want to get in. So look to see what you're involved in, what are your skills, and try to see if there's going to be some value in that. You might be someone who's great at UI design. There's a lot of user experiences that need to be developed in this space to help bring this to the masses. That's a critical thing. You know, said if you're a developer, you can get in. If you're a business person, you got to look for that niche and be able to carve out a niche for yourself. My lawyer, who I found a few years ago in 2012, he was a technology lawyer. He used to work at RIM. He was a developer. I searched for technology lawyers, Toronto. He was the first thing that came up. He came to my office the next day. He's now, you know, one of the most renowned Bitcoin lawyers in the space because we introduced him to it, and now he's getting a lot of clients through that because he's carved a niche for himself out there. So look to see what your skills can do in the space, and that's where I think you might find some success.
Yeah. Hi. So very interesting topic. I just wanted to discuss about the de-autonomous zones, okay, on the platform, on the horizontal layer. So how much flexibility do you have in terms of the customization of, let's say, OpenBazaar or new application out over there? Specifically, what I'm looking at is that, let's say, if you have eBay as a commerce marketplace, one of the challenges which I find is that the sellers which are selling the Rolex watches or something like that, they might be selling fake watches and stuff like that. So if through the blockchain we can actually come up with a more interesting proposition whereby which we can have a society in which the authenticity can be guaranteed or validated, and we can look into driving down the cost, and the trust and the credibility can be increased by creating an open marketplace, we actually can do a lot of stuff. So how are you looking actually at the vertical applications and how you are going to leverage this whole infrastructure?
I can take a first cut. I think it's a great example and a great question to think through. You know, fundamentally, fraud exists in a lot of markets, and you know the fact that there's cryptocurrencies, et cetera, it doesn't. You know, there's still the physical world out there and fake Rolex watches. But I think more broadly, you know, William's point earlier about burying the technology as deep as possible is important. The other aspect, though, is what is the value add? What is the differentiator? Are you an eBay, Me Too, you know, but lower fees? Well, that's probably okay, but you've got to look for something else that, you know, is also more compelling in addition to lower fees, because competing, you know, in a marketplace, for example, you know, the winner is always where the most buyers are because that's where the sellers go and vice versa. So you know, the virtuous cycle of that, you know, anything where there's a marketplace, you know, which is in many ways where these blockchain technologies play a role. So the difficulty becomes you can't just be cheaper, you have to be something better, and the trust mechanism is another area that can be explored.
I mean, that's what this technology does very well with digital assets. That's what this does. It enables for you to prove ownership and prove that you actually have something and able to transfer it to someone else. And we're seeing it now being transferred into things like luxury items. So I've got some colleagues working in China who are working with Louis Vuitton that are creating NFC chips that can be embedded into luxury goods, which use a blockchain in order to verify that they're actually luxury goods. So there's an app from Louis Vuitton. Basically, you just get you're tapping with your phone, and it's verifying the authenticity. And you'd have to destroy the product pretty much in order to actually take the chip out. So we're seeing it now going in luxury goods, and then it's going to go down further and further and further into other goods. You can now do it with wine bottles. You can be able to do it with different anything medical goods or pharmaceuticals. All these things that's going to happen out of this technology by using the technology to help remove the fraud and help remove the counterfeiting that's going on. So that's one particular example.
So we have 2 minutes left, so I'm told, can we squeeze one or two more questions quickly?
So this sounds a little bit like the sort of the sanity after the hype, right? Now, where you're talking about quick race to zero with disintermediation, looking for a business case. As someone who's focused on use cases for enterprises, trying to develop use cases that make sense, I'm struggling. I was hoping to find some answers here today. Hopefully I will, but I'm struggling to figure out what the compelling driver would be for an enterprise to look at blockchain I know the middleman issue is a big thing, but I think you just said you'd only make small amounts of cost savings may not be the driver. Is there really a driver then? What is it?
If you're a big company, there's something that's 25 years old. It's called business process reengineering. This is basically what big companies are doing. They are reengineering their processes, putting the blockchain and replacing old processes that maybe were slower and more expensive. So it is definitely a cost savings component for big companies. And they can be very, very busy for the next 5 to 10 years just doing that. There's nothing wrong with that. Costs. I mean, the costs aspects are very important. Everybody wants to cut costs.
I think it's also keeping up with the technology and identifying the places where you can monetize in the future. And if you're staying ahead of the game, ahead of everybody else, you're going to be the ones identifying that. So in the interim, you want to be saving costs, reducing the manual processes, automating things, while you're looking to identify the new strategies for making money, the new ways to add value, and that's just going to take time.
Okay, great. Unfortunately, we're out of time for questions. These guys are going to be hanging out around afterwards, so feel free to approach them afterwards. If we can put our hands together for Anthony, Jim, and William, that'd be great.
Hey, Lauren.